Hello guys, today I want to introduce you to a new feature called the Executive Dashboard. This is quite exciting and today I'm going to show you exactly what it's all about. The first question you might ask yourself is, well, we already have a perfectly good dashboard in Netstock, why do we need another one? Well, the dashboard in Netstock is very comprehensive and it's used by thousands of users on a daily basis. It's very operational in terms of telling you exactly where all your issues are, how that's improved over time, and where are the items that might be the biggest improvement that you can make in any of those categories. But it's got a few, downsides to it. One of them is that you have to look at each one of your different locations. Each one's got their own dashboard, and it's very difficult to understand how the totals look, because even if you create a region in Netstock, the totals then offset each other. So you might have excess in one location, shortfall in the other, and in the region, the shortfalls will offset the excesses, and you don't get a true full picture. So if you're an executive, you might be more interested in an overall picture of all of your locations, and you want to see what are the total excesses, the total shortfalls, and so on in all of your locations together. So what we've done is created this new dashboard here. It's called the Executive Dashboard, and it looks like this. Because there's so much information to be shared on this dashboard, we have split this up into all these different tabs, but each tab follows basically the same hierarchy. So at the top, you have your filters, and in this instance, the only filter for the summary tab is the location filter. And in this, you can select either a single location or you can select all locations, or you can select a region, and this will then take all of the normal locations that fall into that region and add them together into a total picture for you. The second row is all these KPIs. Each one of these dashboards have a different set of KPIs. So in the summary tab, you can see what your total stock holding is, how much of that is in excess inventory, the percentage of items that are in excess, how much of that is in surplus orders, percentage of the items that are in surplus order status, how much sales are you losing right now because of stocked outs, and what the percentage of items that are in stocked out status right now. And then the third part of all of these different dashboards are all the charts. And you'll see that these are all kind of giving you overviews of the information. It's not, the drill down type dashboards that you get in the normal dashboard. If you want to get into the drill downs and the items, the normal dashboard is still there for you. So let's have a look at what the summary tab gives us. So the first chart here is the inventory value. And what you can see is that on the summary tab, we've broken them all up into quarters. Now, these are standard calendar quarters. So, for example, Q1 starts from January 1st to March the 31st, and so on. Does not necessarily correlate with your company's financial periods. But the idea was to look at a kind of a longer range and kind of compare quarter to quarter. So you'll see in this specific example, the data is taken on 19th of May. So we've got data up to Q2, and you can see what the average on-hand value and the average model value was over time. These are averages because, of course, the inventory value changes over time, and because we're looking at a whole quarter, it takes the average inventory value over that quarter. And so you can see that, we started off in Q1 2022, where the model was higher than the actual on-hand value. In other words, we were stocking out quite badly. This specific example, they, got their act together and put all of the inventory in place that they need. But unfortunately, it looks like it's now gone the other way. If you look at Q2, there's more inventory than what's needed according to the model. The next chart here is the excess, and so you can see what percentage or what value of this inventory here is an excess. In other words, this is more than what you need to run the business, and what percentages of the items are in excess in each of those quarters. So you can see there's a trend, and if that's going up or down. You'll also notice that the scale here from 0 to 10 or whatever the number is for your instance will be the same on a lot of these charts to give you an idea of the scale of the issue if there are any issues. Excuse me. The next bit is the fill rate. And the fill rate you'll see is only if you have multiple locations that you're looking at, like the all locations. The fill rate only really has been recorded since Q4 2022. And it will, as time progresses, you will get more and more bars on this fill rate. If you're looking at a single location, that will go back a lot further. But the fill rate here in this example shows that we are targeting 96, achieving 96, started achieving more than the target. So that might be a good thing. But if I look at the excess inventory we have here, this overfill might not be such a good thing. And then we're looking at surplus orders and the value of those surplus orders. And you can see that, there's suddenly been this big spike at the end of Q2 2023. And so, what's going on here? Why are they ordering so much more than what seems to be needed? And of course, the surplus orders as a percentage of the inventory value, you can see 114%. The inventory value is too much orders. So new on this dashboard that you may not have seen on other dashboards is the sales. So the two bars there will give you the dark one gives you the cost, sales at cost value, and then the revenue sits behind that. And the difference, of course, between the cost and the revenue is your gross margin. And you can see, and this is interesting because now you can see, now that we've got the inventory up, has the sales gone up? And unfortunately, in this example, the sales actually gone down. So we have more inventory. We do have the fill rate, but the sales are actually much lower. And that is why we have all these excess and surplus orders warnings going on, because we are loading the warehouse with inventory that we don't need. So this might be a problem with forecasts. In other words, we are under forecasting what the buyers think that we're going to sell, or it might be a buying problem. Lost sales, again, there in Q4 21, there was a lot of lost sales, when you could have seen the low stock on hand, and that lost sales problem has completely disappeared, which you would expect if there's a lot of excess and not even that much sales. And as a percentage of your sales, the lost sales is also gone down. The next row has got the stock turns. And again, the same story is with the fill rate. We only started recording the stock turns for multiple locations together at the end of Q4 22. And those will start coming up. And so stock turns have come down, which makes sense. Less sales and more inventory on hand. Of course, your turns are going to go down. So this is an indication of the relation between sales and inventory is your stock turn. The investment chart here is an interesting new one, and this is quite a good way to understand why you have all of the inventory, the dollar value or the currency, whatever currency you're using, on hand. Where is that inventory being deployed, and is it deployed in a way that's actually useful to your business? So if you have minimum stock values, this will be on this first chart here. Many of our customers set a minimum stock value. Maybe that's they're in retail and it's a display stock, and they have to have a minimum, to at least fill the shelves. But that's stock that you have to have. It's kind of dead. It's just sitting there. And this will give you an indication of how much of that you have. The next is safety stock on top of your minimum stock. And as you know, safety stock is there to buffer you against those unexpected risks in your business. The two main risks, of course, is your forecasting. In other words, you always under forecast what you think you're going to sell, and you always sell more. So Netstock learns that and automatically adds safety stock to buffer you against that. And the other problem is the supply risk. So our suppliers either deliver late or they under deliver. And again, the Netstock system will learn those supply behaviors for every single item and adjust the safety stock. So this safety stock, $760,000 that we're carrying here, is because of the risk. And if this number is very high, This means that we are too risky, and we can start looking at where are those risks. Do we have supplier issues? Do we have demand forecasting issues, and so on? This is really planned dead stock. In other words, that's only there for if something goes wrong. So you obviously want to get your safety stock as lean as possible without hitting stockouts, of course. And that is where Netstock, with its learning algorithms, automatically looks at every item's risk factors and sets the correct safety stock. So but this is still it's inventory you have that you don't plan to sell unless something goes wrong. On top of your safety stock, you have your cycle stock. So your cycle stock is the inventory that really does move through your warehouse all the time. So your cycle is that classic sawtooth diagram where the stock value goes up to the top of the cycle when you receive from your supplier. It gets sold over time until it hits the bottom, which ideally is on the safety stock level. And on that day, ideally, you want to get a new order in from your supplier, and it goes up again. So that cycle, or the amount of inventory you have, is what is shown as the cycle stock here. And this is your active inventory, and this is kind of moving as generating revenue in your business every day. Effective cycle is what happens when we have supplier constraints in terms of minimum order quantities. So let me give you an example. Let's say we plan a cycle for an item of 30 days, and in 30 days you will normally sell 100 items at a time, right? But our supplier says the minimum order quantity for this item is 500. You can't order less. When you order, you have to order 500. So suddenly you're ordering 5 times as many as you want in your cycle. So your effective cycle is 5 times those 30 days, 150-day effective cycle. That is a problem because it forces you to keep more inventory in your warehouse than what you want to, and reduces your stock turns. We don't count cycle stock in anywhere in Netstock as excess. But if this, like in this example, where the investment in cycle stock, effective cycle stock, is 1.9 million versus our normal, which is only 700,000, this is an indication that we have supplier maybe relationship problems where we might be able to get better information from our supplier and get better constraints from them, so that we can run our business in a more lean fashion. And then, of course, the last bit on top of all of that is your excess inventory. And this is where you have too much, even to cover the effective cycle and the normal cycle. And this is unplanned dead stock. So this is inventory where you just simply have too much, and you need to get rid of it, as soon as you can. You generally don't worry too much on excess when your items are in a high velocity situation. So if they keep selling a lot and you have excess, it's simple, just don't order. It will sell very quickly. But of course, if you have low velocity items that are in excess, that is a problem because they will not sell very quickly. And even if you stop ordering new items, it will still take a while to get them to get that excess burnt off. And in the bottom here, we've got the number of skulls. So this, if you remember, in Netstock's terminology, skull is a stock keeping unit by location. So if you have 1,000 skulls and you have 5 locations, you will have 5,000 skulls. Here we show how this changed over time. So what you can see here is this specific instance. We started with 2,400, came down to 2,300, and then lately it's all the way down to 1,700. So that is an indication why the model is lower, but we still have so much inventory in there. So in other words, it looks like they rationalized their product lines, but not necessarily items in the warehouse. So in other words, it wasn't actual stuff that was sitting there. It was more ERP cleanup. Generally, what you want to see is if you reduce your stocking lines, that your on hands also reduce over the same time period. And then the last chart here is quite interesting, which is the status breakdown. So for every quarter, we look at how many items were in each of the statuses that Netstock picks up. So your OK items, your new items, excess, surplus orders, stocked outs, and potential stocked outs. And obviously you want everything in the green bucket. So everything's okay. It means they're sitting in that cycle. It's just cycle stock that's moving all the time. In this example, you can see, well, even though we can see a few issues up here, there's still a big percentage of the items are in the green. But the other two big ones, of course, are the stocked out and excess. So this is an example of where you can see where we have excess and stocked out items, shortfall. And if we don't offset them into against each other, you can see that we do have a problem with both in this specific example. Right, going to the inventory tab, again, our filters at the top here, you can choose your locations. If your dashboard is broken down by a specific group, you can choose that group over here. You filter this dashboard by that group. And now you also have a time frame. So I've chosen 1 year. So we're looking 1 year back on how the inventory has changed. So the next row, the KPIs, looking at this 1 year, our stock holding currently is $6.8 million. The model is 2.5. We're achieving 98% fill rate. Target is 95. So, we're overachieving. 1,800 skulls. Excess is $1.1 million. Surplus orders 6.7 million. So there's a huge problem there. Stocked at $103,000 of lost sales. And potential stock at another 46,000. There's almost 12,000 new items and $2.2 million of OK items. Right, so the charts here, the inventory is the first one. Now what you're looking at here is we're looking at inventory, but on a daily basis. So exactly day by day, how did this change? And this will give you a far more granular look at exactly how this inventory looked. So inventory value, excess value, surplus orders, and you can see there's that big surplus order jump that's been up there. This looks like a lot of ERP problems here. There's no way that they've ordered that much and then suddenly received all of that. And now there's that much excess. It's not shown here. So this must have been a cleanup, and maybe there's ongoing cleanups in the ERP system. Fill rate, again, day by day, you can see the achieved and the target is in that dotted line there. And once again, you can see how that's changed now on a daily basis over time. Same caveat as before. If you're looking at multiple locations, the first day, I think, is the 19th of December, where we started recording these. But they will, keep recording over time. And if you're looking at a specific single location, you will get more of an history there. And then you can see how the stocked out value changed over time. Again, there's a funny spike, which could probably be data in there, and potential stock out. So very often what happens here is when the potential stock out spike, they predict a stock out later on this chart here. Unless, of course, you do something about those potential stock outs and get the inventory in time, you won't, this is a good predictor. So looking at this, the potential stock out value has really come down, since the highs over here. So we're predicting that the stocked out values will also start coming down pretty soon. Stock turns, so how that's changed over time. Again, same story where we only have history since that day there. New value, so in this specific example, they don't have that many new items, but the new items are the items where you have to spend some time giving a computer forecast. Otherwise, we don't know how to plan for those new items. And of course, the value of OK items in there, and hopefully, this goes up all the way to most of your inventory. Skulls, so you can see the skull count has been pretty stable for a long time, and then these have been these rationalizations, probably just removing dead items from the ERP system, cleaning things up. We always encourage our customers to keep the hygiene in the ERP systems high, so that we can give you the best recommendations possible on the best data. And then status breakdown, same as before, just adds all of those together, but again, now on a daily basis. And we also have the status breakdown as a percentage of 100% here. So that makes it a bit easier to see, for example, where there's a big change like this, you might get rid of all your excess items, and this will then show up here where the excess band gets a lot smaller. In this case, though, the stocked outs went down a little bit, which helped the OKs, but it's kind of back to the level it was before. And then once again, if your dashboard is broken down by a specific group, this bubble chart will show up for you if there's less than 100 groups. Otherwise, there's too many bubbles. And each one of these bubbles is a group. So, for example, this one is computer and games, and the size of this bubble gives you an indication of how many items and what how many items are in that group for a specific group. And then inside each of those groups, you can see how much of how many of those items are stocked out, excess, okay, and so on. So it gives you an idea of the performance by group and the size, the relative sizes of all of those groups. All right, let's go into the sales tab, which is an exciting new one, which is something that we haven't really drilled that much into Netstock before. But this is the new tab here. So again, on the top here, your filters. You can choose your locations and how long of a history you want to look at. I've chosen 2 years here. I think it's going to go all the way up to 4 years if you have the historical data into Netstock. KPIs here, total sales over those 2 years, 16.6 million. Revenue was 30.3, so gross margin was 13.7. My top location at cost was making 12 million in cost, and this is the location's name. And the top location by gross margin gave me $9.4 million of gross margin, same location. Sometimes there's a different location because you might have a smaller location that gives you more of a margin. My top product, this is the product code or description, and it gave us $2.2 million of sales. And by gross margin, 1.7, this is the top product. This is the same product, but sometimes, again, different products might sell more, and another one might actually give you more of a gross margin. We only have 8 items with frozen forecasts, so this is an indication of how well your guys are trusting the forecasts from the system. If there's a lot of frozen forecasts, it means that the planners are overriding the forecasts in the system. It might be a good thing, might be a bad thing, and we've got a bit of a measure for that a little later on. Right, so then sales value, you can see the 3 parts of this chart. The dark purple line there is the sales at cost, and this is in months. And then the gross margin is on top of that dark purple, which is the light purple, and that gives you obviously the revenue on top there. And then you'll see we've got these little bars at the bottom, which is your volume, and this just the number of items sold to make this kind of sales value that you see on the top here. Sometimes what you will see is that the volume goes up, but the value, and especially the gross margin, stays flat. This is an indication probably of a sale, and you're making more volume but less revenue. Or sometimes the revenue or the cost goes up, but the volume stays flat, and that's an indication that you might be increasing your prices, not discounting so much, and so on. So the demand types on the left hand side, how many items are in each kind of demand pattern. So obviously there's a bunch of no history items here. Slow movers 583, no trend, no seasonality 227, sporadic. Seasonal only 68 items. I mean, it's not surprising looking at this history here. There's just not a seasonal pattern to the specific data, and so on. So, and then you can also see what do we have. No trend, no seasonality. We've got $10.4 million of inventory sitting right there. Conservative and seasonal is only the third highest one there. Right, the next bunch of charts, which is these 5 here, is all about where are you making the sales. Excuse me. In this specific instance, the customer is making a lot of sales in this one location, and you can see the cost and the margin, and then the other locations follow after that. If you have more than 5 locations, there will be an other, kind of top 5 in the other. And then you can see the same as these location codes here. You can see over time, and maybe that's changed over time, and you can see where you've made your sales. and then relative contribution. So to 100%, what is the contribution? So you can see in the beginning here, most of it was made by this one location with the dark purple line, but recently that the one with the olive colored line is also now making a lot, so it's contributing more to your cost of sales. And then the same as these two charts we have down here, but this is now by gross margin, not just by cost, and you can see the same kind of information there. Right, now the next is the next kind of 6 charts here, much the same as the previous ones, except these are now the top sales by product. So which are your top selling products? And here you can see there's an other category, and you can see over time and contribution to the total. And the same thing as your top products by gross margin. Again, these could be different because some items might be far more profitable, even though you sell less overall. And you can see the overtime and the contribution there. Right, and then the last bit is the frozen forecast. So where are we freezing those forecasts? So in these 3 different locations are where we are making the most adjustments. And this chart is quite interesting. It gives us 3 values there. The dark purple line there is the actual sales in the last 12 months in currency. And then the computer forecast is in the green line. So what the computer suggested we're going to sell. And then the olive colored line is the final. So that's where the users have overridden the forecasts. And you can see, how that, is the computer better? Is the users better? And so on. And here we can see 2 KPIs, which is the computer forecasts mean absolute deviation. So $162,000 there. But the users changed one is sitting at $168,000. So there's a bigger deviation by the user forecast than the computer forecast. So maybe the users aren't making the best forecast adjustments compared to the computer forecasts. All right, recommended orders. So this is one of those KPIs that we as Netstock really are interested in for our users. We believe that we add a lot of value when the users start using Netstock's recommendation, the order recommendation, actually ordering on that recommendation. So this is an indication of, is this getting used? And for you as the executive looking at this executive dashboard, it might also be an indication of, all the value that you get from the Netstock system. So same filters up here, all your locations you can choose, and how long ago, how long far back do you want to look, 1 year. And here you can see we've created 183 orders on the ordering page for this specific customer. They downloaded 162 of those, so most of them were downloaded back to the ERP system. The trend is 1.5% up. In other words, over time, it's slightly more, but basically flat usage over time. Ordering from 144 different suppliers. There's also, there was 144 supplier orders from external suppliers and 18 DC orders from internal orders. Order value was $9 million, and they were adjusted at the time of creating the order by $148,000. So that number variance down, so reduced the order. But 148,000 on 9 million is not very much. In other words, what this tells me is that the guys placing the orders are trusting the order recommendation that comes out, and that order recommendation is always an indication. If that number looks right and it feels like it's the right number, it means that the inputs to that order is correct. That's your forecast, that's your policy settings, your safety stocks are working, and so on and so on. If you see a big variance here compared to the order value, so let's say they ordered 9 million, but they changed it to the tune of 1 million, it means that the guys sometimes don't trust those order recommendations, and they're always making a bunch of changes. Right, so, and this is on a daily basis. You can see this specific customer periodically places orders, every so often. And here's the source. So are they, placing DC orders or supplier orders? And then where are we placing the orders into? So in this case, the bulk of the orders are going into this specific location. And the top DCs we're ordering from is the same location. So this is obviously a bit of a star system in terms of the supply chain. So all the external orders come into a central place, a DC, and it's then distributed out to the other locations. But we do also place some orders for these two locations from external suppliers. And then here you can see the order value. This was the count of orders. This is the order value and also the change to the order. So you can see in the second location here is where the changes to the ordering quantities are happening when we place the order, and also the third location here. And then who are your top suppliers and other, obviously, and how many orders we placed on each of those suppliers. So that can give you an indication if you have many suppliers, that you have a kind of a healthy ecosystem of supply. Sometimes if you have very few suppliers, that might be a risk in your business where you are too dependent on one or two big suppliers, and if those guys go out of business or something goes wrong, your business could be at risk. So this is just an indication there. And on those top suppliers, what is the order values that we've placed on them, and any amendments that we've made on those suppliers. So this is also a good indication. If there's a big one supplier where there's always amendments made, that might be because your buyers do get information from that supplier at the time of placing orders. You can get a discount if you up your order quantity, or you have to fill a container or something like that. So you can see which suppliers are forcing you to change those orders. And then, like I said, the top DCs and the top value, in this case, it's one DC, and that's the value of orders placed on that. Right, the last tab here is now about actual orders that are coming out of your ERP system. And here we're really comparing the sales orders and the purchase orders and seeing, how that's all happening. So again, at the top here, we have the filters. I'm now looking 1 year back. And then the KPIs are on the left and the charts on the right in this specific chart. The top here is all about sales orders, and the bottom is all about purchase orders. So let's start with the sales orders. So in this case, we have 224 overdue sales orders. That's the red here, you can see. They're not overdue for too long. Sometimes you have sales orders overdue all the way back here, for months. But in this case, it doesn't look too bad. The value of those overdue orders are $288,000, and there's 113 of those orders, sales orders, that are overdue, where we do not have any purchase orders for those. In other words, they are overdue, presumably because we don't have the inventory to actually sell those to the customers, and we haven't placed an order on our supplier. So that might be a bit of a red flag there. And the value of those 113 is $172,000. So a big portion of those overdue orders do not have any supplier orders against them. Then current open sales orders is 268, and that's the green you can see there. And obviously when they are expected to be delivered. So 268, the value is $328,000. That's 42.7% of your sales is currently in open sales orders. So this gives us an idea that this specific instance, this business, is running almost 50-50 on sales orders and kind of just walk-in orders. So there's no right or wrong. Some businesses run exclusively on sales orders. Some are exclusively retailers, and there's walk-ins and people buy. This specific example, they've got 40% of their sales are made of sales orders, and the rest is walk-ins. And those sales orders represent 268 different customers, so downstream. Right, so looking at purchase orders, the purchase orders, 6.7 million open purchase orders, historical purchase orders. So these are the light purple ones you see here. So in the last year, we've placed $6.7 million of orders. 31 of those are still overdue. So these are the red ones here. And again, they are overdue not too long, although there's a little bit of a tail, small amounts, dollar values there. And the overdue value is $1.3 million. So we're sitting at $1.3 million of inventory that has not yet arrived from our suppliers. We're projecting, if you look at this olive color, $4.9 million of purchase orders to be placed in the future. And you can see that on the chart there, and that's kind of ramping up over time because we already have these open purchase orders. So we don't project, placing that much more because we already placed all of these orders. Speaking of the open purchase orders, there's 73 orders open at the moment. There's 206 lines on those 73 orders, and the value is $8.2 million. And the PO to holding 121%. So, like I said earlier, there's a bit of a thing there that looks like we are either we've run out of stock badly and we are waiting on those orders to come in, and that's why there's 121% purchase orders compared to stock holding right now, or we may have opened a new warehouse or something like that. So this percentage is pretty big. Those open purchase orders are on 19 suppliers. 15 of those are overdue, and so there you can see the overdues there. We've got 0 items that are in excess with a PO. This is great news. The last thing you want is items that are in excess already and making the problem worse by adding more purchase orders on top of those. So, great stuff here. No purchase orders on those excess items. But in total, you have $6.7 million of surplus orders. And you can see those open order values look very high compared to what we're going to be ordering in the future, and even compared to what we've ordered in the past. So there's something going on there at the moment. And that is all the tabs in the executive dashboard. I hope that you find this useful. Like I said, this is more of a strategic tool for our executives to look at how your business is doing. Are things improving over time? Looking at all of your data in one, in one view for different, for all the locations added up, and not offsetting those excesses and shortfalls to give you an idea of what's really going on in your business. Thanks for watching, guys, and we will be releasing this soon to your instance of Netstock. Bye-bye.